Good afternoon, everyone. Welcome to this Friday or this week's end of week daily recap. I'm Evan Lazarus, and I want to look back and then I want to look forward. As any student of price will tell you, you need to look at past price to make determinations about the probabilities of future price. Now, the market's been, as we look at the bigger picture, here's a weekly. The market's been, as many of you know, if we haven't said it before, or if I haven't said it before, exceptionally choppy. You can see if we go back in time, through 2012, 13, 14, the market had this nice ascending trajectory. Even the pullbacks, although sometimes violent, created good tradable opportunities and so on and so forth. And we consistently made, higher highs, higher lows, higher highs, higher lows, that kind of a thing. And so it went, higher highs, higher lows. And then as we got into the latter part of 2014, starting roughly about November, we kind of hit this wall. And since we've been at this point, you can see basically here's, your November highs. And I can just kind of draw this horizontal line. And there we are. And we've seen just a ton of choppy, non-committal trading, week by week, up, down, up, down, up, down. And that's basically the nature of what has been 2015 from January, through today. We are now more than, into the 6th month of the year, halfway at the, halfway mark, plus or minus, and the market really hasn't done a whole heck of a lot. Now, obviously, this is just the S&Ps or a reflection of the S&Ps through the ETF. And you can look at various, sectors, healthcare, biotech, lots of different areas that have had either, tremendous strength. You've seen some weakness in some other areas. But as we break the market down, it's kind of been a very much a mixed bag. The general market itself, we talk about the S&Ps, has been, like I said, very, very choppy. And that's created no tailwind. And tailwind is either, going to work with you or going to work against you. Shorting a strong stock is going into headwind. And it's always easier when the market is, or buying, I should say buying a weak stock that's declining is, again, going against the trend. When the market has no trend and you have a very, very choppy, larger, general market, it makes it harder to make money. You don't have the wind blowing behind you. You don't have the wind, there's just no wind. And at some point, this will change. This whole structure will change. And I think we're getting close. And let me explain why. And I've kind of gone through this. I do this in my nightly off the charts videos. But you can see the market, failed to hold new highs. Just a couple of weeks ago, we made new highs. Those highs, came on declining volume, and then the market, failed to hold those highs. Now, this is a weekly chart. It's not going to show you a whole lot of detail. And until we really get below, these February, March lows or the lower end of this range, I think it's going to be, a difficult trade. But I do think that there are very, very strong cautionary signs to look for. Now, let's look at the daily. Now, the daily is even more choppy looking. This is just a choppy mess, up, down, up, down, up, down. But if you actually spend some time and you look at your support levels, or your general area of support, let's just say somewhere in this general zone, we come down, we rally up, we come down, we rally up, we come down, we rally up, we come down, we rally up. The market has defined its very short-term support. But as we look at this, again, kind of looking at our area of support, let's just define it as this general zone, right? We know there's buyers down here. But we also know that, this to me looks like it has the earmarks of setting up a little bit of a short-term reversal pattern. And you have the earmarking or the potential of a head and shoulders pattern building over here. Now you have equidistant or equilibrium or symmetry on both the right and the left side. You can see that this bounce, that we sold off, this is basically the area where the market failed to hold highs. It then rolled over, found support, this week. I think it was Tuesday, Wednesday, Thursday. We bounced. The bounce, short-lived, failure to make new highs or to hold in these general highs, and then today, turning back down. So you have the potential characteristics of a peak with lower highs on each side, with flat bottom support, which would, again, if we were to continue to trade lower, have the potential for something that would ultimately get this market kind of out of this very, very short-term 2 or 3 month trading range. So I think it's there. I think that as far as pattern goes, you have the potential of that pattern. Now, what would make this more intact is we would fail to see higher than Thursday's high. So this high should not be violated. We should then turn down, whether it's next week or the week after, and break this general support zone. That would be the confirmation, so to speak. But this is basically what I see happening. So keep that in mind as you go into next week. I know it's not necessarily the easiest pattern to see, but I do think it is starting to build. And what I think is most important is that this market tried for several times to get outside of these highs. When it finally did, right here, you can see volume was just so low. There was no buyers to be found up here, and that ultimately creates potential reversals. It creates that initial reversal, and then it bounces off support, fails to make a new high, and then immediately turns back down. So keep that in mind as you go into next. So just to reiterate, just keep that in mind, keep this pattern in mind as you go into next week. I can talk about lots of different sectors. I can talk to you about biotech. I can show you the IBBs, and I can show you the line in the sand, so to speak, that this sector, although it's still holding in this range, I believe will be potentially violated next week. Failure to go higher, even so far as yesterday, where it had the potential to really break out of this range and turn down today, to me is and I know there's probably a lot of people that are not going to agree with that. You have to be very, very careful in this market about buying highs, that seems to be a very, very strong indicator of failure. Now if you're looking at strength, you got to look at the ones that are actually making new highs and following through. Netflix, as I remove these annotations, Netflix obviously saw a spike earlier this week, consolidating yesterday and today. Should we break this little zone right here? Oh, I don't know what happened. I switched to an arrow. But should we break this, 660 low, that does potentially open the doorway for a little bit of a pullback. So be careful chasing highs, as these moves are, fairly exaggerated. An example of that, ESPR this week, a stock that, again, failure to hold highs. Right? Look at what happens here. Gaps down from those highs. Those that got caught chasing highs, gaps down, and then rolls over. So, be very careful in terms of buying at highs or shorting at lows, as it can be a very, very dangerous way to trade this market. Make sure, as I've said in several of my videos over the last couple of weeks, and even for those that are off-the-chart subscribers, you don't want to chase price. You don't want to chase it pretty much ever, but specifically in this market. And when you see these annotations, these are all just suggested trades that I put out there in my off-the-charts newsletter. So pay no mind to those, unless, of course, you want to subscribe to Off the Charts. But as we look at leadership and stocks that I think are always key, Apple, we got short at 129 yesterday on this bounce into this broken area, and you can see failure to make new highs and immediately turning down today. So you got to think, you got to go at this market with the right mentality. You got to know where you want to be before essentially that even happens. Successful trading isn't necessarily about seeing patterns or or having a bias and saying the market's going to go up or the market's going to go down. I think that's what the consensus thinks. What makes somebody successful in this business as an active trader is just thinking in terms of probabilities and knowing, what a good trade looks like as that trade is potentially developing. Being able to see forward with an idea of why that makes sense. So, I know sometimes I say these things and you might sit and scratch your head, but here's an example. A stock that breaks a short-term level, failure to make new and hold new highs up here, right? We saw turning point here, turning point here, turning point here. It then breaks a support level, comes down, volume comes up. It then bounces, volume comes down, and then from that area where it broke support, it becomes a turning point, and we make a pivot move down. So knowing where and why you want to be in certain places is critical to long-term success. It's not about being right today or tomorrow, but knowing why you're in trades and being able to decipher what's happening and why stocks move the way they do, to me, is the most important skill set a trader can have. It's not in being a bull. It's not in trying to interpret and analyze news. It's not in making large, forecasts about the next 10 years. It's about being able to generate opportunity as this market continues to tell the story that it tells every day and every week and every month. For those that are, actively engaged in this marketplace. So, if you don't find yourself getting the results or being able to do that, you need to take an advantage and clearly, what we do is specialize in that. But that's really ultimately, in my opinion, and I've been doing this for a long time, that's the key differentiator between bad and good and moreover good and great, is the ability to look at a picture and interpret and analyze price movement so that you can understand where the risks are and when potentially something has changed. And we look at big picture and then we go down to smaller time periods, and that's the way, a good, to me, a good technician operates. You don't ever hear me talk about indicators, oscillators, fancy gizmos. It's all about the movement of price. So that's, if we're kind of summarizing what's happening and, you're hearing me talk and how I evaluate and I can anticipate as to what should come next and why. Well, that's really what I'm doing, is I'm basically looking backwards, and then I'm using that information to then make assumptions about what could or should happen going forwards. And that about sums it up. I hope everybody has a great week. Should definitely be an interesting week of trading tomorrow and I think over the next couple of weeks. So get your head right, get ready, enjoy the weekend, and I'll talk to you later.